Hello, everyone. Welcome to a conversation on the UAE. You have tuned in to the Global Digital Asset Regulatory Summit hosted here in Australia. We're taking a look at multiple jurisdictions today. We started at around 9 a.m. and we'll finish up in around an hour and a half. And today, or at this moment, we're moving now from Australia over to the UAE with Nathan Catania, who is joining us as the moderator for a session. Nathan is from X-Reg Consulting. He's joined by Chloe White. Here in Australia, we all know and love Chloe White, so she is a mainstay in the industry here and obviously over in the UAE. And Vishal Sacheendran from Binance. I hope I got that right and didn't brutalize your name. I'm going to bring you all to the stage now. It'll take around 5 seconds and we will get this session underway. Here we go. 3, 2, 1, and are on. I'm going to hand it over to you. Thank you, everyone.
Great. Thank you, Amy Rose. Good afternoon, Australia. Good morning from Gibraltar, where I'm based. And thank you for having us on this panel today, where we're going to be exploring the regulatory landscape in the UAE. My name's Nathan. I'm a partner at a consulting company called X-Reg. The reason we're called X-Reg is because we're a team of ex-regulators. We work almost exclusively on crypto asset regulation, and a big part of what we do is assist our clients in understanding what the regulatory landscape is looking like, what regimes are looking attractive. And a lot of our international clients tend to consider the UAE as one of their options for many reasons, and we'll be exploring those today. It's always in the mix when we're looking at jurisdictional setup, partly because of the environment from a regulatory perspective, and you'll see that it's definitely a very safe and welcoming and less hostile, I'd probably say, than other jurisdictions, and as well the market is just great over there. So we'll be speaking about that today. Luckily and interestingly, I think is the first panel I've ever been on where all of us are ex-regulators. So we've got Chloe ex-Barra, we've got Vishal ex-ADGM, which are the two main regimes that are considered in the UAE. So I'm very excited to have both Chloe and Vishal here today. Maybe if Chloe and Vishal, of you have just quickly introduced yourselves, then we can kick off.
Thanks, Nathan. Chloe White, based in Dubai, and as Nathan just mentioned, formerly the International Regulatory Policy Advisor to VARA, the primary crypto asset regulator in Dubai, and prior to that, also from the Australian government, also working on virtual asset policy. And I'll hand over to Vishal.
Thanks, Chloe. Thanks, Nathan. My name is Vishal. Currently, I head up regional markets at Binance, overseeing our licensing strategies and frameworks across the world. Prior to this, I was heading up authorization and licensing for intermediaries within the Financial Services Regulatory Authority at ADGM, but I was there for about 6.5 years. And prior to that, I was in TradFi with the Bank of New York Mellon for another 6 years.
Great. Thank you for introducing yourself. So I think let's go straight in. But I think before we go into the detail and start exploring the regulatory stuff, maybe we can talk about just the environment in the UAE. What's it looking like? Why is the UAE looking attractive from a crypto perspective beyond regulation? So I don't know if who wants to volunteer to kick off.
I can give a high-level opinion. I would say over the last more than 2 years that I've spent in the UAE, it's consistency and resiliency. We all know, for those of us who've been in the industry for a long time, that things change very quickly and it's a very volatile market. But I would say that the energy and the momentum in the UAE has been really resilient through all different market conditions. And that's been a really consistent feature of the landscape and ecosystem. So it's been in a continual growth era over the 2 years that I've been there, but it's something that's been bubbling away, growing strongly, well preceding the last 2 years as well, with a lot of the groundwork that's been laid, particularly the coordination that's taken place between different levels of government and industry. And Vishal can share an industry perspective on that as well.
Absolutely. I think from the perspective of the government, it's been a long time coming. And before the virtual asset space, you had the fintech growth as well, spurt, and that also kicked off from this part of the world. It kicked off here in the UAE. You had various sandboxes. ADGM we had our own sandbox called the Reg Lab, and from there you could see the kind of push to kind of foster innovation as a whole. It was not just on fintech, but the 2030 vision of the government of the UAE itself was, and innovation was one of the primary pillars for the government. So they invested a lot into it. They created a lot of incubators, accelerator programs across just to foster innovation. You have a AI university here now in Abu Dhabi. You have all sorts of. You have these visas. I know Thailand has a digital nomad visa as well. You have those kind of visas that kind of entice developers and entrepreneurs to come set up shop here. The tax environment, I'm not going to speak too much about it, but everyone knows what it is in this country. You have to deal with a crazy summer heat, but hey, the rest of the months are pretty nice. But it's conducive. It's conducive, and they've created an environment. They've created a lot of programs to help and drive innovation in this country.
Right. Yeah, and I think having been to the Middle East many times in the past couple of years, it's definitely you feel like it's a welcoming environment. And it feels like the government's making a really big effort to make the cities great places to live, for example. So I think beyond just regulation, just the environment and just that drive to bring people both to live and also for the tourism has been exploding in the region. One of the things that I always used to get confused about when I started doing work in the region is sort of dividing the landscape in terms of the Emirates, the free zones. Just navigating that can be quite complicated. So I don't know if Vishal, if you want to kick off and just explain the sort of like where the lines are drawn, the divide, and just so people can understand like how it functions, particularly once we start moving into the regulatory space and where the perimeter is. That can be quite interesting.
So you have your onshore main regulator, which is the Central Bank of the UAE. That's the banking regulator, banking and broker. And then you have the securities regulator, which is ESCA. And then there was a law in 2004, law number 8, which kind of built out, allowed each emirate to have their own financial free zone. So Dubai came up with the DIFC in 2008, if I'm not mistaken. And then you had ADGM that went operational in 2015. And each of these financial free zones, they have their own, like Dubai was, both are based off English common law. Abu Dhabi, ADGM was, again, it was to entice more international players to come and set up shop in the country where they're comfortable with the legal framework, right? As opposed to a Sharia law, which is more onshore. And those are the 4 main regulators in the country. And then you had VARA now, which is, I think, the world's first and only pure virtual asset regulator globally. So I think those are the main regulators in the space. And depending on what you're trying to do, depending on the activity you're doing within the financial services sector, you pick and choose. But you have to be where your clients are. You want the capital, you want investments. They're different parts, different moving parts, and you have to see what's best for your business, basically.
Perfect. So Chloe, do you want to maybe expand on that, especially the VARA? What does VARA do? What's it responsible for? That would be interesting to hear.
Yeah, that was a great introduction by Vishal. That one of the really exciting things about the Virtual Assets Regulatory Authority, VARA, is that it is the world's first crypto dedicated regulator. So it's a really exciting project. The full set of licenses have been in the market since early last year. And it's been really exciting to see which businesses have come to take up those licenses, including Binance, of course, and other big industry Web3 natives, Crypto.com, OKX, but not only exchanges, also a bunch of asset managers, custodians, broker dealers. So it's a very exciting ecosystem to watch evolve. But the mission of VARA really is to try to provide consumer protection and assurances along the value chain that's required for Web3 native businesses to succeed. And a lot of Web3 companies globally have been calling out for regulation for a long time because they know that if they have recognition from a regulator and they're operating in a licensed environment, it makes it easier to form partnerships. They can build trust with their consumer base, but they can also interact with TradFi. They can obtain insurances, get banking. So there's a whole value chain that these companies need to plug into. The ecosystem that evolves in these different options that you've outlined in the UAE, they can appeal to different types of businesses at different stages of their development. And so similarly, when I have clients who come looking for advice of where they should be seeking licensing, we look not only at the different types of licenses available, but what different ecosystems are available that might suit that business at that stage of its growth, to see how does it make sense in the context of the ecosystem that it's operating within. And I think that's a helpful way to conceptualize when you have the different emirates within the UAE and the different free zones. It definitely can be a little bit intimidating for people who are new to the market or new to the region to try to unpick and make sense of that. But then once you start to get familiar and maybe to think about them as ecosystems, then you can find the one that fits with you in terms of maturity and culture and other factors as well.
Great. So I guess, yeah, maybe speaking of ecosystems, you're saying how it may be worth looking at what the ecosystems are looking like in these different regions as opposed to just the pure regulatory environment. How would you describe the ecosystem in Dubai? What sort of businesses would you encourage or suggest should establish under the VARA regime, for example, as opposed to ADGM?
I would characterize the Dubai ecosystem as having a high risk tolerance. There's a tangible excitement about innovation and trialing things that are new and pushing the envelope. So that's a really nice place to go and experiment and to rapidly innovate as the market evolves. So Dubai tends to attract a lot of diversity. It's very international. You can get the solopreneurs, very, very startup stage projects, or also businesses that are already established overseas, but this might be the first time that they've entered into the Middle East, and they see Dubai as a friendly, approachable place to get a foothold in the MENA region. So it's kind of like the most approachable entry into MENA, and there's a lot of I think, diversity and opportunity available in Dubai, that it might be perhaps an easier place to enter into if you're new to the region. And so that, I think, characterizes what I've observed about the different mix of virtual asset stakeholders and players that I've seen in Dubai. The thing that probably surprises people a little bit is that because the government is so supportive of innovation and they've been so hungry for Web3 investment and talent and businesses, that some people have been a little bit surprised by actually how high of a mountain you have to climb to get the license. It's not an easy feat. The regulator takes its responsibility very seriously and does want to be seen as being one of those world-class regulators that's not afraid to enforce its regulations. So it is very exciting. There is a lot of opportunity, but it shouldn't be misinterpreted as a walk in the park.
Great. And I think, yeah, we used to take the same approach back when I was in the regulator in Gibraltar. It's all about setting the bar high enough to have like a strong environment of regulated firms, because it only takes one or two to really ruin that reputation.
Yes, exactly.
Great. So I think maybe Vishal, you can tell us about the ecosystem in Abu Dhabi and maybe how it contrasts, if any, to Dubai. What are you seeing in Abu Dhabi?
See, ADGM was not crypto specific, right? It was another activity. When we were formed, we were created to service Abu Dhabi's wealth. All the fund managers, the asset managers that Abu Dhabi has, the sovereign wealth funds that are based there, and you have all these people that serve those sovereign wealth funds, and that's why we were created. And as we progressed down the road, we brought in innovation. Our CEO, Richard, at that time, we had a huge drive towards how do we foster that innovation, be it fintech, and down the road we saw crypto assets as well. And if I'm not mistaken, we were one of the first globally to actually come up with a comprehensive framework for crypto assets. And as opposed to others, and this is what Chloe said it correctly, it is, while Dubai Vara is very welcoming, at that time, ADGM, for us, it was more about the institutional adoption of crypto. So the bar was raised really high. It was very difficult for startups to come and set up shop there unless you were really backed by someone big. It was quite difficult. It's quite capital intensive as well. So we had raised the bar so high, and that was done on purpose because we wanted to get the right players in. We were the first jurisdiction actually regulating the space. A lot of eyes globally were on us at that time. Everyone was looking at us. How are they going to run it? How are they going to regulate the space? How was this different from the other regulations that were kind of more AML and AML focused only, as opposed to what we were doing from a more of an activity-based regulation? So that was the difference. That was the key driver. That was the key driver differences between what ADGM was doing and what the rest of the countries were doing. But I think with VARA coming in and them being a crypto-specific regulator, you actually see the growth. You actually see a lot of ancillary service providers also coming. It's not just the ones that need the licensing. It's the one that provides services to those licensed entities as well. And that has been a huge driver, huge driver. I think there was a term that CZ coined. It's going to be the Wall Street of crypto very soon.
Great. And would you say there's an element of competition? Do you think that the environment in Abu Dhabi has responded to VARA?
No. They're both playing. VARA's playing one section of what ADGM does. It's not the whole thing. And for that matter, even the DFSA, the DIFC also has a crypto framework out there right now. So it's not exactly competition between them. They are, and this is what Chloe nailed it first when she said you have to pick your ecosystem. Which ecosystem do you think you would thrive in? Which suits your business model? Where would you rather be? Who are you servicing? Are you servicing the institutional side? Are you servicing the retail side? Are you servicing all coins in the marketplace? So it really depends on how big you are, how big you want to be, and what you want to do. So I don't think it's a competition as such. They're very comfortable in their own.
So in terms of the ADGM position, it's still largely institutional focused. If you want to access the market in Abu Dhabi, definitely you want to be under the ADGM framework.
Yes, and again, the DIFC and ADGM are not specific to where their remit is. In ADGM, you can operate in and from the ADGM. So your clients could be anywhere in the world. There's no restriction on where your clients are. So you don't have a restriction from that perspective. But what I'm trying to say is, if you're looking to access, tap into Abu Dhabi's wealth, you want those backers with you. That's where you need to be in Abu Dhabi. Yeah. And people who are funded by these large sovereign wealth funds, people who are funded by these large scale VCs, they tend to be there more than anywhere else.
Right. But even though you're
you can be in both places.
Yeah. Actually, that's the next point I was going to mention. Like, sometimes you get the question, and maybe the answer is why not both.
Yeah, exactly. So, which is what we've done.
So I guess Binance is a perfect example where you've got licenses in both. Do you have maybe part of the business that services institutional out of ADGM and the rest in VARA? Like, how does that work? That would be interesting
we have a custody license in ADGM, which we haven't operationalized yet. But our main exchange is with VARA.
Great. I think maybe then, like, I know we've been talking about the environment more broadly, but maybe we can just give us like 2 minutes each, just describe what the regime is like. And I know we've been discussing about AML and how both these regimes actually go well beyond AML, which is great, and it's been needed for many years in the crypto space. A lot of jurisdictions just responded to FATF pressures. They just put in a light AML registration, and a lot of businesses parade the fact that they're registered in jurisdictions and give the impression that maybe they're licensed when they're not. So These are two regimes where you actually have a solid financial services level license. So it may be worth explaining what these regimes are like, what's involved, maybe some key differences between both. If you know them, that would be good to hear as well.
Yeah,
Do you wanna
sure.
kick-
So as Vishal outlined, and he can speak to in the Abu Dhabi regime, it's one whole regulatory system and environment that bridges across TradFi and accommodates virtual assets. Whereas with VARA, it is designed specifically for the Web3 industry. And so you can go and get licensed for quite a broad range of activities. It is an activity-based regime. Something that distinguishes it from the DIFC common law free zone and the ADGM common law free zone is that they don't maintain any lists of tokens. However, there are specifications around the due diligence that those companies are required to do on tokens, which they do have to be transparent about and publish and share with their users as well. So it is broader. The activities I already mentioned, some include exchange, broker-dealer, custody, asset management. There are other business models that you can get licensed for as well, but those are the ones that have been the most popular, where the most licenses have been awarded in the market so far. So it is a very focused regime, but it attempts to facilitate basically any kind of business model that you might imagine. One area where we could say that Abu Dhabi is ahead would be with DAOs. DAOs are referenced in the VARA regulations, but there's a lot more guidance on DAOs in the Abu Dhabi regime at present, and there are others also looking at this, but I think that Abu Dhabi has demonstrated quite good leadership internationally, not only within the UAE on that point, which has been really exciting. So as I said, it really depends on how you want to build your business and what you're trying to achieve. That's going to determine which is going to be the right regime for you, whether that is in the UAE, and if so, in which emirate, and even within an emirate, which regulated, because there can be more than one. So I think that what VARA does quite successfully is eliminates a lot of confusion that businesses face when they're trying to read through TradFi regulations and say, well, but how does this work with private keys, or how does this work with crypto assets, and trying to map those regulations onto new technology can be really challenging. So that's something that I think is a fantastic role model for many other jurisdictions who haven't yet implemented any regimes to potentially look towards and say, here's an example where it's actually being done and it's operationalized.
Right. Yeah, and I think when you build a regime from the ground up, you do get that advantage. You've got the different rule books for all the different activities, so it's very easy to tell like what actually applies to you as a business, and it's written in your language as well, which is great. So you can really understand like what the requirements are, rather than having to reference maybe 6 different pieces of translation and trying to understand all the different cross references and what applies to you and what doesn't.
That's a good point. The original drafting language of the regulation is English, so that also eliminates potential point of confusion.
Great. So yeah, Vishal, maybe tell us a bit more about ADGM as well.
No, Chloe said it right. I mean, when ADGM rolled out the framework, like I mentioned before, it was 2018, but six years ago. There was no previous framework that we could actually reference or try and do. So the teams, our markets team, our AML unit, the intermediaries team, across the FSRA, the legal teams, everyone's got together and they kind of built a framework which didn't treat it as, it was not an asset-based framework. It was more an activity-based framework, right? And like Chloe said, it's where TradFi kind of unites with traditional finance. And prior to that, when the fintech the hype was going about, and we had the sandbox running, we used to use the sandbox to kind of test the different solutions that are out there and create frameworks around them, be it robo-advisory, be it private financing platforms, whatever they were. But we used the Reg Lab as a test bed. With crypto, we went straight to regulation because we kind of understood quite fast what what it was. The activity was the same. They were either MTFs or broker-dealers or recognized investment exchanges. They were asset managers, fund managers, however you call it. It was the same thing. The activity was basically the same. What was different within this asset class was the real-time settlements. So with that came other problems. Okay, so we need to have more rules around custody. We need to have more rules around AML. We need to have market surveillance at a higher level. We need to have technology governance at a higher level. So those are the different buckets that we kind of created, and the framework was built around it. And it was pretty much the same framework that you had for all the other regulated activities. It's just that when you were doing a virtual asset or a crypto asset activity, you had additional layers that you had to go through and you had to come under. It was not easy. As in, I'm not talking about it from a regulatory perspective. I mean, I think we rolled it out within 4 months. It was not easy for applicants initially to kind of understand, get their heads around it. It took a long time for some of the early players to come in. It's just because it was the barriers to entry were quite high. But eventually they got there. And now it's become like Chloe mentioned, you have DAO frameworks, they have DAO regulations coming. They're looking a lot into DeFi right now, DeFi protocols, and how we can kind of not regulate that space, but actually understand that space a lot better. So eventually, I think ADGM has had a good leadership. It has great the thought process. And Chloe and you can also verify this. It's very difficult to find talent within the regulatory circles who understand the space. And that's been a constant problem across all regulators. And I've spoken to regulators globally. It's very difficult to find talent in the space. And that's where a lot of the regulators kind of fall short when they don't understand it, when they don't have people to understand from. That's where you kind of need to know how do we get about to regulate the space without understanding it? What are the nuances that we need to figure out for our jurisdiction? So I think it is working in that space.
Right. And I think it really goes to show in terms of regulatory development how sometimes timing can be a big influence in terms of how things have been designed. So as you say, ADGM, one of the first movers, not much to see out there in terms of other regimes, not much to see out there in terms of how the industry had developed as well. So that the industry was a lot more infant at that stage. So it is easier, I guess, or maybe even the right thing to do is let's try and apply existing principles to these businesses. And I think as you pointed out, Vishal, a lot of these crypto asset businesses, particularly the centralized institutional focused business, are offering very, very similar services as the traditional world. And a lot of times the only reason why they weren't regulated under traditional frameworks is because they were dealing with crypto. And crypto wasn't really thought of when most laws were drafted, meaning that it would fall for the cracks, which I always found quite interesting. I don't know if we have much time left, but I think it would be great to maybe talk stablecoins for a couple of minutes. And as Chloe and Vishal have both said, ADGM started off with quite a traditional framework, but they've been looking out at what's happening. They've been considering emerging areas such as DAOs, and another emerging area in regulation is stablecoins. And only recently, I believe it was last week, although I've been working so much, it could have been 2 weeks ago. My head's a bit fuzzy right now, but I think it was last week. ADGM released a consultation on a stablecoin regime, which is particularly interesting and quite different to some other stablecoin proposed regimes or existing regimes, where you can actually provide an interest to holders of a stablecoin. So I don't know if Vishal, you want to kick off?
I haven't looked too much into the stablecoin regime, to be very honest, but I know there are already licensed players in ADGM, and there's a licensed product as well that has gone about. Interest-bearing stablecoins, I think, if I'm not mistaken, interest-yielding stablecoins, if I'm not mistaken. They haven't had any traditional stablecoins out of there yet, but I think that's something the central bank is also looking at in the UAE. But it's a matter of time. It's a matter of time before these players come in. Stablecoins are a huge part. It's a huge part of this ecosystem as a whole. And we'll see how that goes. I'm not too sure if VARA has anything on stablecoins either as of yet.
It does. The stablecoin regulations are contained within the issuance rulebook. And it was created in the context of some of the serious governance failures that occurred in the industry in 2022, Terra Luna and the series of defaults that occurred. in the aftermath of that. And so what you see when you look at VARA's stablecoin regime is it does contain a lot of similarities to the stablecoin rules in MiCA in the European Union that reflect the environment and context in which it was created. So for example, rehypothecation of assets is prohibited by default in both regimes. Audits are compulsory. You need to have a third-party assurance. There's white paper requirements that specify which details have to be disclosed. The VARA requirements on that are similarly rigorous to what has been mandated in MiCA. Liquidity and reserve policies, how to handle redemption requests. There's also prudential requirements. And a range of other risk management requirements. And separately to what has been proposed in the Abu Dhabi consultation paper, there is a prohibition on interest and fees under MiCA and VARA under the current stablecoin policy. So this really, I think, reflects the regulator's response to what they'd observed as being particularly high risk activity in the industry. So the VARA regulations, in my observation, are a little bit more principles based than MiCA, but they ultimately, I think, have a lot of similarities.
Yeah, and what's your view? Maybe just we're just gone over time, so I think we've got to wrap up soon. But what are your views on the interest point, which I think is quite topical? So you've got certain regulators that are like specifically banning interest on stablecoins because they don't want these stablecoins to be used as investment products and encourage payment use, for example. That's a big point under the MiCA regime as well. Like paying interest on a stablecoin makes it feel more like an investment product as opposed to something that's specifically designed and should be used for payments. Whereas you've got other regimes, not many, but ADGM being one of the first to actually open the door for interest-bearing stablecoins. So what are your views, I guess, just to wrap up?
My personal view is I think that it is a good policy to explore and to see if it can be facilitated through licensure, because it does start to mean that stablecoin issuers can offer a product that's more analogous to like a bank savings account. And I think that is quite a natural direction for the product to take, but it certainly should be approached in a way that does acknowledge that this has failed in the past and it can fail again. And so we do need to be very mindful of risks and think through what is going to be the best way to conceptualize this from a regulatory and licensing perspective.
Great. And Vishal, last words?
I would agree with Chloe. It's a good way to explore, but again, you have to look at where it's going to be listed on, and then would that make it a securities exchange or a crypto exchange? And those definitions start getting murkier. And then you're opening Pandora's box. So it has to be dealt with, very carefully. It's a very thin line.
But I guess definitely Abu Dhabi and the ADGM regulators have what it takes to monitor that. So they're definitely very excited to see what happens in this space and in the region as well. So thank you both for sharing your insights today. Thank you, Amy, again for having us, and we'll see you soon.
Thank you so much. I'm sorry for having to cut it. We're back to back, and look, honestly, the amount of people who I have reaching out asking where the best country is to go and whether they should go to Dubai, like, it's top of mind at the moment, and it's absolutely important. So for anyone who's watching this recording, we'll be in the lobby shortly, and we'll be generating a report out of this. So thank you so much, Nathan, Vishal, and Chloe. So good to see you. We're going to jump right into Britain, Switzerland, and France now. So if you want to jump over there, attendees, I'll see you shortly.